Accounting superstars, welcome back. Today we're going to learn about the completed contract method. I'm Professor Don Bush, and I've been teaching accounting for over 30 years and been a CPA for about 30 years. So I've got a lot of fantastic ways to teach accounting that you'll understand. So the completed contract method is very similar to the percentage of completion method, but easier. It's way easier. There's a whole lot less we have to do and a lot less we have to keep track of. So let's get started, and here we go. So I'm using the exact same numbers from last time. We are building a large office building for $600,000. And you know what? I've got not applicable here. You know what? The engineer can tell us, but actually we don't need to know that in order to do the completed contract method, because the completed contract method is so easy. So, okay, so the engineer tells us, but we don't really need to know it. Now, the actual total project cost to date, now this we do need to know. So we ask the engineer and we say, hey, how much has been spent on this project? And the engineer says $100,000. And if you watch the percentage of completion method video, I'm using the exact same numbers so you can compare the two methods. Percentage complete to date. Well, you know what? So the month of June comes and goes, and we ask the engineer, we say, hey, how much have you spent to date, and what do you think the estimated cost for this project is? And the engineer says, well, I think the estimated cost for the entire project as of right now at the end of June, we think it's going to be, we don't need to know that either, not applicable. Save us a lot of time and energy here. Total revenue recognized today, well, we're not recognizing revenue until we complete the project, and that's where we are different than the percentage completion method. With the percentage completion method, we recognize revenue each and every month as we complete the project. But with the completed contract method, we don't need to do that. We're not going to recognize any revenue until we are done. So what do we have here? Zero. We're not recognizing any. Now the next line here, the project cost month only. Well, this is the month of June, and I'm just going to transfer this number 100,000 up above here, down below, and you'll see why I'm doing this in the future months here. And I've got a blue arrow here pointing towards it, meaning we're going to use that number for a journal entry. Percent complete during the month only, we're not going to need it. Not going to need it. This is not the percentage of completion method. This is the completed contract method. So a lot of stuff we don't need to know, which is great. So far, all we need to know is the project cost to date. Billing sent to customer each month. Now this we do need to know, so we need to find out, was a bill sent to the customer and how much was it? So here we go, $125,000. Cash received from customer each month. So let's see how much cash was received this month. $120,000 was received from the customer. Revenue recognized at end of project only. Well, we have not recognized any revenue, and we won't until the project is complete, and it's not complete as of the end of June. So let's go down to the journal entries. Fortunately, the journal entries are very simple. So construction in process. Well, how much did we spend on the project for this first month? We spent $100,000. You can look right up above here, $100,000 actual total cost to date. And we're assuming that we spent cash to do this. Accounts receivable here. So how much did we bill the customers for? We billed them for $125,000. We're crediting billing sent to customer also. And you can see we got that number from right there. How much did the customers pay us? Well, we collected $120,000 and $120,000. There we go. Folks, there are only 3 simple journal entries. That's all there is to do it. So let's go down to the balance sheet here, and we're filling in just a partial balance sheet. Now, normally this little partial bit of the balance sheet would be in the current asset section, but there's going to be a little bit of a twist here. Watch and see what happens. Construction in process. So let's see here. We spent $100,000 on construction in process. So we'll drop in 100 grand, And what were the billings sent to the customers? Well, we sent bills for $125,000, which means that the balance here is a negative $25,000. Costs and recognized profit in excess of billings, negative $25,000. So here's the trick, folks. This is the thing that you need to watch, is that this is going to be listed as a current liability. So this information on the balance sheet, it happens to go on the current liability part of the balance sheet, not the current asset part. Now, if this negative $25,000 was a positive number, it would go on current assets. But it's negative, so it goes on current liabilities. So there's the little trick that you got to watch out for. So coming down to the month of July, estimated cost for the entire project. Well, we could ask the engineer how much he thinks it'll cost us to do this project. But you know what? For accounting, we don't really need to know. But the actual total project cost to date, that we do need to know, and the engineer tells us that so far for the entire project, they have spent $375,000. The percent complete to date, we're not doing the percentage of completion method, so we don't need to know that. Won't help us out. And the revenue recognized to date is going to be 0. We're not going to recognize any revenue until the project is finished. So project cost for the month only. Now folks, we spent $100,000 in the month of June, and grand total for June and July $375 to date. So in July, apparently we spent $275,000. Percent completed for the month only. We don't need to know that. Won't help us out. We're not doing the percentage of completion method. Billings sent to customers. Well, we have to find out, were bills sent to customers, and if so, how much? So $300,000 was sent to customers, and cash received from the customers during the month of July, $280,000. So let's come down to the journal entries. So construction in process. How much did we spend this month on construction? We spent $275,000. You can get that number right up here. And we're assuming we're spending cash. Accounts receivable and billing sent to customers. So what was the total amount of invoices that we sent to our customers? Well, it's right here. $300,000 was sent to them during the month of July. And here we go, $300,000. So that journal entry is done. And how much did the customer pay us? Well, the customer paid us $280,000. So here we go, $280,000. Let's go down to the balance sheet. Here we go. So to figure out July, what we have to do is take our beginning balance of $100,000, construction in process, add to that $275,000, which if we do our math here, it ought to come to $375,000. Billings sent to customers. Well, we billed our customers for $125,000, and we are adding to that $300,000 for July, so that should be $425,000, and it is. So the difference between these two numbers here, a positive $375 and a negative $425, it's going to be negative. It'll be a negative $50,000. So you might be wondering, why are we putting this in the current liability section? And the answer is, we did $375,000 worth of work, but we billed our customers $425,000. So we've, in a sense, overbilled them for the amount of work that we did. So we owe them more work, and we'll get it done too. So it goes in the current liability section of the balance sheet. So coming up here, month of August. Well, we can ask the engineer once again, hey, what do you think it's going to take to do this entire project? And guess what? It's not applicable. But the engineer says, hey, we are done with the project. We are finished in the month of August here. We have completed the project, and the grand total actual cost to date was $480,000. And folks, we're charging our customers $600,000, so you can see we made a profit. Charging the customer $600,000, cost is $480,000. There you go. Percentage complete. Well, 100% complete. We're done. Total revenue recognized today. Well, folks, we are going to recognize all the revenue because we have completed the project. That's how it gets its name. Project cost only. Well, here's what we do, folks. Back in July, the entire project was up to $375,000. In August, we're finished with the project and we spent $480,000. And so the difference between these two numbers is what we spent during the month of August, $105,000. Percent completed during the month only? Well, we don't need to know that. We're not doing the percentage of completion method. Billing sent to customer. Well, I bet we sent to them the balance. So if you add up 125 plus 300,000 plus 175, I think you would find it adds up to $600,000. Cash received from the customer, 200,000, and I think if you add up 120 and 280 and another 200, you will come up to $600,000. So the customer has paid us in full for our work. So let's do the journal entries. So once again, how much was spent on the project for this month only? Well, $105,000 was spent. So here we go, and we're assuming it was just paid in cash. How much did we bill the customer for? We billed them for $175. $175. How much did the customer pay us? Well, the customer paid us an even $200,000. There we go. Coming down the list here, folks. We've got 2 more entries to do, and they're very simple entries. And we only do these entries when the project is finished. Billing sent to customers, and we're recognizing the revenue. Well, ladies and gentlemen, what was the contract amount again? The contract amount was $600,000. We are going to recognize all of that revenue here at the end of the project. So I'll put $600,000 right there. And how much did we bill our customers for in grand total? $600,000, and I think you could figure that out here. Billing sent to customers, $125, $300, and $175. If you add those 3 numbers up, you get $600,000. Construction in process expense here, and we're closing out construction in process. So how much did we spend on construction in process? $100, $275, and $105. And I think if you add those up, $480,000 right there, folks. The project is finished, it's completed, and we closed out construction in process. So this should be 0. I wrote closed here just so you know it's gone away. It's 0. And billing sent to customers, that's closed also, which means this is closed out. So ladies and gentlemen, when you use this completed contract method, well, you use this method when you cannot figure out in a logical way the progress that you're making on the project. Sometimes that may happen where there's no good milestones where you can tell that you're 10% done or 50% done and so forth. Another reason why you might want to use the completed contract method is when your payment is in doubt, or maybe you are in a lawsuit with the customer or something. And sometimes that happens in construction. Hope you liked it. If you did, hit that subscribe button and hit the like button. And we will see you next time. Over and out.